Is Sydney Sweeney going to make millions of dollars for American Eagle outfielders and us as dividend investors? Hi, my name is Jeff Wright. I'm with Fish Creek Capital. We are an investment management company that focuses on dividend growth and dividend growth portfolios. Let's take a quick look at American Eagle and just kind of go through the process quickly and see what it actually looks like as a company. I like using seekingalpha.com. I've got it pulled up right here behind me. Let's just put in AEO, which is the symbol for American Eagle Outfitters. We're just going to go through a couple of tools that can help you evaluate companies like this real quickly. So American Eagle, they actually do pay a dividend. Seeking Alpha has tons of information. It's the they're paying around a 4% dividend yield right now. That's an annual yield. So if you look down just through some of this on the summary page, you can see some of their grades are okay. Valuation B plus, growth they have an F, rating summaries all hold. This is a good place just to look for different commentators on their analysis of the stock. You see some buy ratings here. There's news articles here also. So this is a great place to look. But what I really like looking at for us as we focus on dividends and dividend growth, you can go to this dividend tab and you can see the summary. They'll grade the dividend status and the safety and the growth and the yield. You can see it's not looking that great for American Eagle. They, like I mentioned, they've got a yield of right over 4% right now. Their payout ratio is looking pretty good. You want that. If it's below 50%, that's great. And this is 47%. Let's see what they've got on their history. Oh, we've got a D plus here on dividend growth, but they have paid a dividend payment for over 20 years. So that's pretty impressive. I wouldn't have thought that for American Eagle. So they do have a dividend scorecard also. So let's look at the growth. A lot of red here. So that's not the best. You want to look at the dividend growth rate over 10 years. Like that's a helpful tool. It's 0%. You drop down to 5 years, do have a 12.7% growth rate. So that's pretty strong. We like looking at the 10-year growth rate average just because that's giving you 10 years of history, which is very helpful when it comes to building a portfolio. So based on Seeking Alpha, it doesn't really just jump out at me as a great dividend hold. Let's see what we've got. Another tool I like is Fast Graphs. It's a great tool for just getting a quick view of where a company is when it comes to their valuation and what price you're paying. Over on the right, you'll see, the first thing you'll notice, this chart is all over the place here. This is the max history that they've got. This goes back to 2006. This actually looks terrible, frankly. You don't really want this when it comes to evaluating the dividend holding like we're looking for. You'd rather have a good, steady decline of growth. This is just so choppy. This would not be ideal for what we're looking for. But let's just keep going here. They've got a blended PE of 10.2 right now. So their normal PE ratio is 14.5 on this time frame. So looks like it could be a little on sale right now. Fair value ratio of 11.25. So we are below that also. If you take the normal PE ratio of 11 over this time frame, they've got a fair value stock price on this of $18, and this current stock price is $12. Today it's like $12.18 or so. So this is showing data from yesterday. We're August 21st today. Future stock price of $20. So they're saying an estimated annual return of 26% based on this data. We can drop down the the historical graph to 10 years. Let's see if that looks any better. It's still real choppy. In 21, it went really looks bad here. So it's still choppy. These lines, the lower you can get on here, the better. Like the orange is going to be the fair value. The blue is going to be their normal ratio. So like if you can click right here on the actual PE and then go over to where, let's say they go back to the normal fair value ratio. That's showing a pretty good annual return there, 14%. So that tells me here that from our perspective, this is not necessarily the best dividend stock per se, but there could be some potential growth possibilities here. Sydney did boost the stock. Like if you look at a chart, here's American Eagle on Yahoo Finance for 5 years. Like it's been as high as $40 or down to $12. So that makes sense with what we saw in Fast Graph as far as it being a on sale price right now, more of an attractive price from an evaluation perspective. If you go year to date, it still it was 17 and it's kind of gone down to 12 there. So yeah, so this could be a potential stock if you like American Eagle, if you like their products. Please read on their financial statements and look at their earnings report. This is not financial advice. This is just a quick way to look and evaluate what does American Eagle look like from an investment standpoint and from a dividend standpoint. So I would not grade it very high, probably from a dividend standpoint when it comes to a good grower that we're looking for in our portfolios. But could the stock appreciate from here? It looks like there's potential for that. So that's something to keep in mind. When it comes to dividends, it does, your profile does matter. What your goals are does matter, and this could potentially fit your goal. But again, not investment advice, just a quick evaluation of what American Eagle Outfitters might look like from an investment at this stage in the game and where they are today. So if you like this quick look at this company, please subscribe, please like this video, please subscribe and follow for more information on dividends and dividend growth just like this. Thank you.